How's it going? I'm Andrew with Investors Hub, and we're happy to have Billy Duberstein back on the show. And we're going to be talking about a wide variety of different topics, one of which being what's going on with AMC. We're also going to chat about inflation fears here in the US and exactly where that quantitative tapering might happen. And he's also going to share with us his thoughts on what might be the next growth sector. So yeah, if you like the video, be sure to like, comment, and subscribe. I know you're tired of hearing it from every YouTuber, but it is really important to say those metrics really help our channel grow. And also share it if you like the video. Can think of somebody that might want to know a little bit more about investing. And after a quick disclaimer, we'll hear from Billy. Please note that our videos are not designed to be direct investing advice. Our channel and our content should just be one stop on the journey of trying to find out where to put your money. So inflation, and you got to say it a couple of times. Make sure that the search algorithm picks it up. They like it when you say the word and put the word in the title. So what are your thoughts?
You have to say it 3 times.
Exactly, or 3, 5, yeah. However many you need to. So what are your thoughts on inflation fears here in the U.S.?
I think some of the doom and gloom about runaway inflation is premature at best. However, everyone that has been warning about runaway inflation since 2011 has been dead wrong. I think there are some secular factors that have been keeping a lid on inflation, and we've been undershooting our target for the last 12 years. Clearly, we have more stimulus now into an already strong economy, so we are stimulating in a bigger way than we have before, which gives a possibility of higher inflation than we had in the last 10 years. But in terms of runaway inflation that we had in the 1970s, I personally don't think that's going to happen. And if it does, it's too premature to count that. So I wouldn't panic just yet. I think the demographics of a lower working age population combined with a lot of this technological innovation can really keep a lid, are big secular macro forces that keep a lid on inflation. So I think we can run a little bit hotter than we have without losing control. That's my personal view. However, it is something to keep an eye on during the course of the year because the last inflation report was pretty high. That being said, there were some quirks in it, like used cars went up 10% month over month. That's not going to be embedded 10% used car inflation for the rest. So there's going to be some weird numbers as the economy basically accelerates out of the pandemic faster than we had anticipated. But in terms, the only problems you get into is when you get high embedded inflation for a sustained period of time, and we're not even close to that yet.
So quantitative easing, we're at extremely high levels of it, right? And it eventually does have to be dialed back in some way. But quantitative easing isn't just a big lever that the government pulls that goes on, off, ka-chunk, ka-chunk. It's a bunch of different levers and knobs and dials, and they can control individual little bits and pieces of it. So what do you think will be the first dial that they dial back? And if you're feeling particularly courageous, when?
Well, the Fed actually just made a small move. They're selling about $13.8 billion in bonds that they provided to companies during the under one of their emergency facilities that they implemented at the onset of the pandemic. Now, $13.8 billion in bonds is basically nothing. In terms of tightening, I think they're going to eventually taper their bond purchases. That'll be the first thing. There's going to be a lot of investors. We could get some market volatility around the time that they announce that. I don't think that's going to happen until 2022. Previously, the Fed had said they won't be doing anything until 2023. They might have to move that up because I think the economy's doing fairly well, and it depends if we get that big infrastructure package. That could also make them move a little bit quicker. I think they will be deliberate in raising short-term rates, given that I think they tightened too fast in 2018 and sent the market into a tailspin. So I think they'll be very gradual and deliberate about it. There's definitely a portion of investors out there who don't trust the Fed and don't think they have a handle on anything. But I tend to think they know what they're doing and doing everything in their control to ensure their dual mandate and not crash the market at the same time. But I think it's going to be a little while unless we get some a continuous series of surprises in inflation um, for several months. I think this is a ways off. I think it's 2022, late 2022 story.
So speaking of hot topics and search engine optimization, it's time. We got to talk about it. So what are your thoughts on what's going on with AMC? How many rocket ship emojis should I be using? And are meme stocks the next growth sector?
Meme stocks are the next growth sector. Well, the stock prices are growing, which is incredible. The AMC thing is hilarious. In a way, retail investors who may or may not know what they're buying are sort of ensuring the survival of the company, which is good for the company. However, if you're buying stock at, I don't know, what's that, $45 now, I think there's almost no way in the long run you're going to get your money back. AMC, unlike GameStop, actually GameStop had a pretty good balance sheet and has a new management in charge that's trying to make the company into a digital company. AMC is not doing that. I mean, AMC has $5.5 billion worth of debt, and they're a movie theater company, and they're going to be a movie theater company going forward. It's less good of a situation actually than GameStop, I would say. Once everything gets back to normal and the company starts operating again, and you see how much cash flow it actually makes, I think it's going to cool a lot of. I don't think the share price will stay up here. I did see that the CEO Adam Aron just announced a new platform to directly interface with his retail investors and offer them perks like free popcorn and special screenings, which is also like very amusing. God bless him. He's a very enthusiastic CEO of a company that could be worth almost nothing. AMC is going to survive, but I just looked, I think its share count has quadrupled and it's still almost $5 billion in net debt. And before the pandemic, it was making like $300 million in free cash flow on a good day. So on a good year, you're pretty much just doing trading sardines here. You're not investing on any sort of value proposition. You're trying to buy and sell to a greater fool. And I would not recommend that in this market.
So how much do you think that the zeal is from the retail investors by themselves, or are there, because you know the narrative is being framed as retail investors versus hedge funds and fund managers, right? And I'm wondering what your thoughts are on the idea that there might be sort of fund managers on both sides and retail investors are just the sort of loud patriots.
Yeah, it's a great question. I think you're right, because I don't know if the stock can move this much based on retail alone. I could be wrong. I don't know the dynamics of it. But for instance, a hedge fund who owns some of AMC's debt called Murdoch Capital just bought $230 million worth of new stock. And then the stock went, they diluted shareholders and the stock went up, and then Murdoch sold out like a day or two later. So they gave it an equity infusion, which would actually help their bonds. And then the stock went up and then they exited. So they made money on that as well. So there's clearly, I think there's clearly some hedge funds that are jumping on this bandwagon and I wouldn't say maybe manipulating in a legal way, and are definitely participating in these stocks as well. I mean, as we now know, Discovery and Viacom was basically all a hedge fund called Archegos. I think if a trend starts on Reddit, it gets picked up by hedge funds and then they pile in, and we're seeing some very interesting stock movements as a result of it.
So what sector do you think is going to be the next growth sector?
Obviously, traditional movie theaters. Now, good question. And people have been talking about electric vehicles for a while now, but oil prices are heading up towards $70, and if the infrastructure package passes in the U.S., there's going to be more incentives for clean energy. And I think with Ford coming out with its electric F-150, I think EVs are in for a lot of strong growth. And that's not to say I have any particular stock recommendation because it's a very competitive sector, obviously, the auto sector. In addition to the other tech trends that are already happening, 5G, AI, but those were happening prior to the pandemic and just got accelerated.
So are SPACs coming back, you think? Or has the SPAC ship sailed?
I think it's a mistake to paint all SPACs with the same brush. Obviously, we've had a huge amount of IPOs and SPACs in 2020 and 2021, multiples of what had come to market in prior years. So when you get that amount, there's bound to be some subpar companies, some bad actors that I guess tarnishes the whole SPAC realm. But there are good SPACs and there are bad SPACs. With fears of inflation taking over, a lot of them have sold off a lot. A lot of interesting SPACs have sold off. One stock, it's actually in the EV space that seems interesting to me, is this company called Romeo Power. And they don't actually make a full vehicle. They only concentrate on the best electric battery packs for commercial vehicles. That SPAC had been bid down to like the $7 range. So, SPACs go public at $10. Romeo had gone up to like 30 and sold off with the SPAC wreck, and it was down in the sevens. I think it's back toward in the 9 range now, because there's been a battery cell shortage. So it hasn't been a demand problem. There's been a supply problem. And according to the company, they have the best battery packs in the business. Now, something like that is very speculative. It's very early stage. So any type of position you take in that, I would size appropriately, but that's just one example. And there are several examples of some companies with some really interesting technology that have gone public via SPAC that have kind of been thrown out with the bathwater.
So do you have any final thoughts?
Yeah, this is going to be a wild year as the economy reopens. I would make sure that your portfolio is balanced between some growth names that take off, that will benefit from some of the digitization trends we've seen, but also maybe some cyclical and value names that have lagged the market for the last 10 years, because we could get a roaring hot economy and we could get some higher than expected inflation. So maybe something commodity related, some financials could do well, certainly, and they've been laggards the last 10 years. So I really look to balance your portfolio, because there's going to be a lot of weird rotations, I think, between different types of stocks in the market this year.
Do you have positions in any of the companies mentioned?
Yes, Stone Oak Capital has a position in Romeo Power, which I just mentioned, and we also are long Romeo Power calls.
Hey, thanks for watching. And if you haven't already, be sure to like, comment, and subscribe. You can follow us on Twitter, iHub_vision, and I'll see you again soon.